Imagine waking up one morning and realizing that your savings, the money you worked so hard for, is worth way less than yesterday. Groceries, way more expensive. Gas, through the roof. Your home, sure, it's going up in price, but can you even afford to upgrade? What about the property taxes? Well, guess what? This isn't some dystopian future. It's happening right now in Canada. The big print is coming. As Larry Lepard says in his book, the government is running out of options, and when they do, they always turn to one thing: money printing. And you end up paying the price. But here's the good news. If you understand what's happening, you can protect yourself. So let's break it down in the simplest way possible. Over the last few years, Canada has faced some of the highest inflation rates in decades. You have felt it at the grocery store, at the gas pump, and in your rent or mortgage payments. The government tells us they are controlling inflation, but behind the scenes, they're doing something very different. They're creating more debt. Canada's national debt is over $1.2 trillion. And how do they deal with that? By printing more money and borrowing more. The same playbook as the US, just on a smaller scale. But here's the catch. When they print more money, the value of the dollar goes down. And when that happens, your purchasing power drops and everything around you gets more expensive. They tell us they're helping economy, but the truth is they're making everyday Canadians poorer. The Bank of Canada might lower interest rates soon, just like the US Fed is expected to do. Sounds good, right? But it's just another way to keep kicking the can down the road. History tells us what happens when governments print too much money. Look at Argentina, Venezuela, Lebanon, Turkey, Sri Lanka, or even Germany back in 1920s. When too much money floods the system, confidence in the currency collapses. Now, I'm not saying Canada will turn into Venezuela tomorrow, but I'm saying this. Your savings in Canadian dollars will lose value over time. Your salary won't keep up with real inflation, and your wealth is at risk if you are only relying on traditional assets. And let's not forget about the welfare system. Things like Canada's pension plan, old age security, employment insurance, and even our healthcare system. These programs rely on tax revenue and a growing productive workforce. But what happens when we have a collapsing birth rate? Fewer people working and an economy that's stagnating. Here's the real problem. Canada's gross debt to GDP is now over 107%, meaning the government owes more than the entire economy produces in a year. That's worse than the US, and it severely limits Canada's ability to manage its fiscal deficit. Governments have two choices: raise taxes or print more money. Both will make life harder for Canadians. More taxes mean less money in your pocket. More money printing means higher inflation. Either way, you pay the price. So what do you do about that? Smart investors don't sit around and wait for things to get worse. They take action. That means diversifying your assets into things that hold value over time. I'm talking about gold and silver because real money doesn't lose value. I consider Bitcoin as a hard asset as well because it's a decentralized way to store your wealth away from government interference. I know some of you don't like Bitcoin and have some skepticism about Bitcoin. That's fine. You can still consider gold and silver and other hard assets like commodities as part of your portfolio. Cash flowing assets, businesses, real estate, not in Canada, but in any location where you have landlord-friendly laws and lower taxes. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property. a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and it allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later. Or anything that generates income regardless of the inflation. But let's go one step further. Geographic diversification, places like Dubai, Singapore, Malaysia, or so many other places in the world that offers incentives for investors to bring their money and build in a lower tax environment. Those countries are attracting global talent. Meanwhile, Canada is overtaxing its citizens and making it harder for entrepreneurs to succeed. So ask yourself, if the system is rigged against you, why play by the same rules? You don't have to leave Canada entirely, but moving some of your capital into different asset classes or even different countries can protect your financial future. Now, here's something even more important. You don't have to figure this out alone. One of the best ways to navigate uncertain times is by surrounding yourself with like-minded people. People who are thinking ahead, taking actions, building real wealth despite what's happening in the economy. That's why I've created a WhatsApp community where we discuss career growth, investment strategies, real estate opportunities, and personal development. If you want to be part of that group that's actively working towards financial freedom, join us. The link is in the description below. Let's grow together. You don't have to be the victim of the bad economic policies. You can take control of your financial future, but only if you start right now. That's why I have put together a course to help you understand exactly how to protect your wealth in times like these. If you want to learn more, check out the link in the description below. Take the first step toward your financial security. Or if you prefer a one-on-one consultation, book a call with me as well. Let's talk about your specific situation, because the big print is coming. The only question is, are you ready? If you found this video valuable, hit the like button, subscribe, and let me know in your comment section if you have any questions. And even if you don't like the video, still let me know in the comment section. I'd like to take your feedback. Let's spread financial awareness before it's too late. See you in the next one.